Your pension's underperforming, you don't know why. Well, you might be with one of these. Vanguard Life Strategy, 80% equity, A shares accumulating. Or maybe a Fundsmith, which is incredibly popular. Well, why is it going so wrong? Why has it failed to beat the market? What are the reasons why people are underperforming in their pensions? Let's just have a look at some of that. Now, common problems are these. First of all, your IFA wealth managers put you in something which is far lower risk than you actually wanted. They don't listen to you. They keep charging you fees. Another common issue, and it's happening with Vanguard, is what's called fee layering. What they do is they take your money and then they put it into other funds of their own. And those funds are also charging you a layer of fees. As you can see here with Vanguard, that's a common thing to do. And they shove it into, just guess what, only their own products. It's very much a closed shop. So you might then ask, but surely Alpesh, that's a good one to put it in. So is the developed world, and surely that's a degree of diversification and risk mitigation. The problem is, if you wanted more growth than they're developing, then they're producing, then the fact that they have then gone and split your money into sub-funds with their own fees and then put smaller amounts into, say, the US equity fund or FTSE Develop, and you've got small amounts in each, would mean that there's going to necessarily be a lack of performance, because actually the right thing for an expert to do was to use their expertise to say, actually, we should put the money directly into the underlying, not a multiple of sub-funds which then invest in another bunch of sub-funds. Similarly, when they put cash into global index fund, low performance. Okay, because of course that's the nature of it. You might as well, that's what I wanted. I wanted a load into government bonds and so on. Guess what? That bank account, 4.5%. Problem with Vanguard Global Index Fund? Well, guess what happens to bonds when there's a loss of confidence in the government's plans? The price of bonds goes down. Your pension drops because the price of bonds has gone down. So there's a fundamental problem with using that approach, as opposed to what I far prefer is just shove it in a bank account if I want to try and get bond-like returns. Okay, 4.5%, that's what banks are paying at the time of speaking. So that's one of several problems. Let's look at something like a Fundsmith. Why does that keep, for the last 4 years, underperforming a basic simple index tracker? Well, first of all, they've got it wrong, because they keep putting money into these things, which are not the most fantastical things to put money into. To give you an example, between 2022 and 2023, so for 2 years, and let's not forget 2023, the NASDAQ was up 55%, and they do like American companies after all. For those 2 years, their total return flat for 2022. Well, they were down a bit in 2022. In total, it was about 5% up for 2 years. That is pretty poor when you consider the NASDAQ was up 55%. Why is that the case? Well, because they got it wrong. They just got it wrong. They just got it wrong, okay, in terms of what they had. What they should have had, Meta, no problem this year. Microsoft, fine. I don't have a problem with that. But what the hell with some of the others? What is wrong with them? Okay, and they've been underperforming. They would have been far better just to say to you, listen, as Warren Buffett often says, put it into an S&P tracker. If, like me, you even have 2 times leverage on that, you can get ETFs with 2 times that. Not recommended unless you know what you're doing. There are a lot of ways around this fundamental problem of lower growth, one of which is see what your money's in, transparently go through it, and that's a pretty good answer. The answer isn't, is there another IFA, another wealth manager? No, because institutionally, they've all got the same problem. I've been, for the last 25 years, from my 200 columns in the Financial Times, my 18 odd books, been on a mission to teach people to invest themselves. When I set up the hedge fund in 2004, it was to show just how bad these retail funds are, and places like St. James's Place are. If you would like a free pension review from a hedge fund manager and his team, go over there and we will happily give it to you to explain why things are wrong. This is actually part of the analysis we've done for somebody who did message into us. Okay, so poor performance, let us know, and we'll tell you where you're going wrong. And you know what? Knowledge is the first step to taking action. Thank you very much.